Hey guys, welcome back to my channel. We're passionate about helping people with business and accounting. Today's video is about stimulus fraud, whether it be intentional or unintentional. So if you're interested in hearing what I have to say about that, keep on watching. On July 28th, the Office of the Inspector General issued an alert of potential fraud in the EIDL program. So basically what they found is that people were going into banks and opening accounts under stolen identities. Account holders were having the EIDL funds deposited into their personal account with no evidence of an actual business. They saw that account holders were transferring the EIDL funds into investment accounts. And how this all came to light was the financial institutions were reporting that people were receiving EIDL funds with no evidence of a business. So typically, if you run a business, you should have a business bank account. Not all people do, like sole proprietors, some of them operate with a regular checking account. I don't recommend doing this. I recommend that you separate your business and your personal and have a clear distinction between you, the business, and you, the person. So what happened is this is all getting reported and they're looking into these types of accounts. Now, how can this be perceived as unintentional fraud? If you received either PPP or EIDL and you are not using the funds as its intended purpose, then you are committing unintentional fraud. So PPP was designed to help employers with payroll. So basically for employers to continue to pay their employees for work even though sales are down. We wanted to keep as many people employed as possible, and in order to do that, the government issued forgivable loans for people. And what's been happening is people are saying that they have payroll when they actually don't. People are saying that they have a business when they actually don't. Or they use the funds to start a business, and that's not the intent of the loan. Now, the head of the FBI in Boston issued a statement saying that they are really cracking down and looking into a lot of these fraudulent transactions. So really the message that I'm trying to communicate, guys, is if you receive these funds and you legitimately had a business and you're using it for its intended purposes, you have nothing to worry about. Even if you were to get audited, if you keep your documentation, then you'll be fine. For people that are in the gray area that started their business well into, March, April timeframe and are trying to either get PPP or EIDL, then you're outside of that window. And if you did receive those funds, I would seriously consider returning them. I read a news release where the Department of Justice issued the statement of two businessmen in Rhode Island that got prosecuted for basically stating that they had a business when they legitimately didn't. Now, this video was really informal. It was really just meant to get the word out, to make sure that you are using the loans for the intended purpose. If you don't think that they're looking at this, they absolutely are. This is something that's being heavily looked at and that can be audited down the road. So we have a lot going on with this pandemic and all of the different agencies are scrambling to figure out all of how this is all going to work out. But in 3 to 5 years, they're going to have time to look at these audits and they're going to focus on the higher risk, probably the higher dollar amount first, and then work their way down. I mean, the FBI, I believe, released a statement at some point that's saying that they had another agency that they were adding to their departments to look at some of these things. So there are some things that are going on and this is being looked at. I don't want to instill any fear. I want you guys to just understand that this isn't just here's free money, no strings attached. They are giving you this money, whether it be PPP for payroll to use for its intended purposes or EIDL for economic relief for your business. So they're issuing these loans with conditions that you need to use the funds for its intended purpose. As a former auditor, I was really curious in how they tested some of this information. So I read the report, and basically what they're doing is they're leveraging the IRS EIN database to figure out when some of these businesses applied for their EIN, and they are isolating people that, had their EIN years ago. They reduced it to just the number of people that applied for EIN, let's say in March timeframe. So in March, if you're just applying for your EIN, then you're trying to open up a business checking account. That would be one of the reasons why people would apply. So then they used that number and imported that number into the database to figure out how many people, started a business after COVID and applied for these loans and got funding. So they have their ways to testing this information. Yes, maybe someone's been in business for 10 years and just applied, but from an audit perspective, we're gonna narrow down our sample size and our scope to figure out who and what is going on during this time frame. And so the audit report was really interesting to me. I did read most of it. I will link it down below for you guys if that's something that you're curious in reading for yourself. I'm not trying to instill fear. I am just trying to get the word out to make sure that you use these funds for their intended purposes. If you receive funds and you did not legitimately have a business, consider returning the funds, because if you applied as a business owner and you don't have a business, then you committed a felony offense. Lying on a loan application is a felony. So keep that in mind. I hope you found this video helpful. If you did, please give it a like, subscribe to the channel for more updates, and I'll see you in the next one. Bye.